Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Monday, May 20th, 2019. More like a late morning session update. It's 11:04 Eastern Time as I'm starting this video, and I just wanted to do a quick recap for members of some of the things I'm watching today. Not just the broad markets, we'll start there, but a couple other things that we're looking at. All right, so the bigger picture, I'm going to get down, as I usually do, towards the end of the video, a little more granular to the 60-minute charts, intraday charts. But bigger picture here, remember, is that we're smack between a pretty significant support level, about 178 on QQQ. I'll get to SPY here in a second, and then the recent highs, which again were my uppermost bounce target for the counter trend rally that started back here. What's that, Monday before last? Yeah, last Monday. So that's the bigger picture, and remember, it could be some noise. Noise is just back and forth grind. That is a possibility. Although I will say I like what I see so far today. If you recall in Friday's video, I laid out a scenario that would be pretty bearish, and that would be a gap down. And I said that that's something that wouldn't surprise me. It's what the market likes to do, to deny longs an objective exit if they had a stop below, let's say, the recent lows, and it also denies wannabe shorts, those that want to get in but didn't want to pull the trigger when things look good. And, that's human nature. That's why I tend to be very contrarian. I tend to get bullish when everyone else is, the majority, I'm speaking, the masses are bearish and want to go short, and tend to then get bearish when everyone, wants to go long because they see two big green candles. And not always. I'm not always, bearish for the sake of being bearish just because something's going up. But again, it all comes into the bigger trading plan. That's what I want to say in this video again is, I'll post constant analysis. That's what I do. And so I'll go down to 1-minute charts. I'll post day trade ideas. You have to define your trading style, or you'll get whipped to pieces, both psychologically and, literally, as far as trades being stopped out, second guessing your trades. So, if you're, you laid out a trading plan, if you are, on the same page I am, that there's a lot of bearish technicals built into the longer term charts that say we could see much more downside here in the coming weeks to months, then forget about the noise. At this point, you should probably be most concerned with a impulsive definitive break above 186 on QQQ, and or a breakdown below an impulsive solid break and or close down below 178, and that would be maybe to scale out of shorts or add to longs if you're bullish. Again, you can take my analysis, flip it upside down. Just because I might be bearish, what I'm doing is listing levels. So again, if you're long, you want to buy at support, you buy pullbacks to 178. And maybe you add to those positions if we break out solidly above 186. Whereas a short those short might want to start covering above that level, and or may want to add to short positions on a break of 178. So again, that would be, define your time horizon. If you're a swing trader, you don't have time to get in and out with the intraday charts. Then just focus on the bigger picture. And with that, we had a solid break of the trend line off the lows on December 24th. Some pretty clear sell signals. Tech is broken. The bearish case on the weekly charts has been firming up lately. So again, these are the levels to watch, and I'll get to some of the other shorter term levels for more active traders here in a second. SPY, same story, 279-ish, or what did I see? Yeah. I think I had 281 the other day, but we had a low as low as 279.93. That's why I set that number there. So just to be safe, let's say we need to take out that. We'll call it about 280. That's close enough. And then about 289 to the upside. That seems to be the range right now on SPY. And so, if you want to look at it glass half full, I'm not at this point, but it's certainly something I'll make mention for those of you bullish. Then we had a breakout of the downtrend line here. Remember, I had that as a price channel breakout. We ran up to resistance, which is normal to get a pullback, and now we're back testing the trend line. So this would be your bullish case. Of course, next buy signal to come there on a break above 289, but you can go long in the back test here. But I'm still favoring a continued move down and a break of that level, and then more downside to come. So those are the big levels, and let's just get down a little tighter here. 60-minute charts. All right, here's SPY on one board I have. This shows the Fibonacci's I covered last week. This counter trend rally failed right at the 61.8. So far up to last week, it was nothing more than a typical run-of-the-mill counter trend rally, with possibly more to come. Let's just say it comes just to be an ABC corrective wave here, with the market still going to new highs. I still look at more downside there. Again, that the fact that we retraced only that hit that 61.8% key Fibonacci retracement level tells me that so far this was nothing more than just a run-of-the-mill counter trend bounce. And on QQQ, same story, failed right at the 61.8 fib. Let's look at levels. We have I posted in the trading room earlier today, not too long ago, that the rally Qs may want to kick back and have a little, there was a little snapback rally on the 1 minute charts that started out, and I said keep an eye on the 181.13 level, because that was, if you recall, on the 60-minute chart from last week, I had listed 3 bounce targets. My lowermost at 181.13, then 182.76, and then what is that there below? 185.53. So we popped, just a hair above that 185.53. That's where we reversed. But this is still a valid level, so that's a level that that I think we could stop at today. And if we do, if this snapback rally from the open, this is what it looks like on a 1 minute chart. Here's on a 1 minute chart, you can see the gap. Here's the gap down from Friday's close right there. The yellow dotted line represents the previous close. We gapped down, we sold off a little this morning, and then had this relief rally so far. We've only partially filled the gap. I imagine a lot of traders, gaps usually once entered usually are backfilled. So I imagine there's probably quite a bit of traders positioned for a backfill of the gap. And maybe it happens. I can tell you if we get there, that would certainly be a level, if you're day trading this up, to take profits. And I wouldn't wait for a full backfill. If that's your target to backfill the gap, best to set your sell limit orders a little shy. However, if we fail and reverse shy from there, a lot of traders that started buying QQQ either at the lows, anywhere in between, or once it started entering the gap, meaning above, this is where we, the opening candles here. If we fail to even, get hardly into that gap, or fail to completely backfill it, that would be pretty bearish, because then those day traders or even swing traders that might have positioned there will soon be stopped out. Most likely they should. If you bought the Qs for a gap backfill and it starts to go the other way, then the prudent thing to do is recognize that and have your stop loss in place. There's a minor uptrend line on the 1 minute chart as well. That's been broken. But we still have, you can see this is really, that line here is about where we consolidated this morning before this thrust up, and we're back testing that now. So this is, again, I'm getting very granular here. It's a 1 minute chart. Let's just back out. And again, I just wanted to point out that gap if we do happen to take out the level I just showed you on the 60-minute chart right here. Which again, so these are, they were resistance levels before, and they still are now, and that's 181.13, just a little above that 181.60. So that, I'll call that a resistance zone, which I'll be watching. I'm slightly leaning towards that capping this rally, and I think that would be a very good thing for the short case, if that's all we can get is a little muted bounce and then another thrust down here at about this would be a near-term target, 176.74, pretty decent support you can see right here. If we go up on through there and we make a backfill the gap, and again, this chart's a great display of technical analysis. Remember, these were the purple lines that I laid out last week, and you can see how they played out. We went up, we hit the first one, we had a little momentum going to the upside, so we overshot it a little bit, but we had a reaction there. Came up to the next one. If you zoom in really tight, we stopped there. That's a 60-minute candle, stopped, a reaction. Another 60-minute candle, traded on it for an hour, and then finally broke above it on the third candle. Came and back tested it, and then moved up to my final target there, my final bounce target. And then what I wanted to point out here is look how we closed the week. We pulled back just a hair above that support level. Remember, resistance once broken becomes support, and then there it was. There was a gap that I was looking for last week. What it does, it traps in. It traps everybody that was chasing that rally, that bought long here and might have said, okay, well, I'll set a stop, just below, so I don't lose much. However, boom, they were gapped down today. So there's probably, I believe, or I know there is quite a bit of trap buyers right here. Just as there might have been some shorts that were maybe a little too gun shy to pull the trigger, and are just now hoping for a backfill the gap to short. So it would be, just as me tape reading, this is how I trade. If we fail to do that, that's all the more bearish. You'll start to see, more panic selling and maybe a quick move down. The shorts will eventually probably come in late, but that may help the case as well for more downside. Okay, so just to simplify it, if you're actively trading, this is I believe an objective level to short. This would be your next objective level, or this would be a zone here, but we hit that 180, 113 level since I posted in the trading almost perfectly right there with that candlestick there, and we're still below it now. Let's see where we go. Undercut today's lows. That should open the door for more selling. You have last week's lows. We'll probably go right through those, I think, if we take out today's lows. And then as I said, 176.74 is really the first decent resistance here on this chart. Let's look at SPY. SPY had that 289-ish resistance. I put the purple lines there, hit my uppermost target. So there again, I showed you on the daily chart. Here's that downtrend line, price channel there, back test. There it is. If we put it right there, you catch that top of that candle. There's our trend line. So a perfect back test so far. And although it's not a scenario that I'm buying, I can see where longs might want to step in for the back test of the trend line and for a swing up there, maybe even beyond. But again, I think we'll probably fail here soon, take that level out, and let's look at the futures real quick. All right, this is NQ, as I mentioned in the update this morning charts I'm watching. Nice dump overnight, and this has just been a common theme lately. Most of the big moves are occurring in the overnight session, and that's one reason I like to trade futures. You can kind of keep you're not subject to gaps. Now, of course, weekend, when you go into the weekend, which it did, you always have that's when futures stop trading. They shut down Friday evening, shortly after the market closes, and they're not going to open again until Sunday night. So that's when you have risk of a gap. Other than that, you don't have much of a risk of a gap with the futures trading virtually around the clock with brief shutdown periods each day, but only about an hour or so. All right, there's so that's pretty bearish. Again, we took out that potential uptrend line. We took out the 74.58 resistance level. I also mentioned the trading room. That would be if we get there. It doesn't align perfectly with that first level I showed you, but maybe the second resistance level I just showed you on QQQ on the top of the bounce zone, the resistance zone, that would be a bounce back to 74.5825-ish, which was it's a level I've had on my chart for quite a while now. On the downside, it was a target. It was hit right here. We had a little reaction, broke it, bounced back to it, had a reaction there, pulled back. And so again, it would be just looking at the futures charts, the next target here. And then if we fail and move lower today, maybe into tomorrow, first stop here is at 72.75-ish level. We reversed just shy of it. For all intents and purposes, we hit it right here. So the fact that we've pretty much visited that level once has me tilting towards a scenario where we break it the next time we get there. We may have another reaction on it, certainly possible. I'd be remiss not to point it out. It is the next support down below, next decent support. And beyond that, gets pretty ugly if we take that out. And again, that's what I'm looking at here. I'm looking at maybe the weekly and daily charts finally starting to play out for a much deeper correction that's been pricing into the charts for quite a while. So That's my plan. Is I'll micromanage positions, cover when bounces look, but I have a core short holdings. In my less active accounts like IRAs and things. I don't actively trade in and out day trades like in the primary account, the day trading account, my trading account, I should say. But the let's look at ES real quick. Yeah, the point there was I just wanted to mention that right now, I'm in swing mode after scaling back into all the short positions last week on the bounce back to those targets. There's ES for you S&P 500 traders or futures traders. It's just that megaphone pattern I've been highlighting for a while just continues. Look at all the reactions. I mean, you can go long on the pullbacks to the bottom line, but it is a downtrend line, and the downtrend line above the top of the megaphone pattern has just produced nice shorting ops all along. So what I'm watching right now is this minor uptrend line right here and this 2830 level. I believe I posted that in the pre-market session, and you can see if we zoom in tight, we kissed the 2830 level. So that was tagged so far today. Let me tighten up a little better there. There it is. Reversed, and now we need to take that out. So that would be the next, let's say, sell signal or bearish development in the futures there, a solid break below 2830, and that should open the door for a move down here to about 2793. Okay, moving on. Crude's still an active trade. Believe me, I'm not crazy about all the tensions going on in the Middle East and with Iran, because that's put a bit. It's slowed. It's crude. That we're still not. We're well below the stop. We're still profitable on the trade. Hit the first target already, but with tensions in the Middle East, it's giving cross currents. In other words, crude has been highly correlated for many months now. Very highly correlated with the stock market. So normally, if we didn't have the tensions in the Middle East, I have very little doubt that crude would be down a lot more than it is now. But I shared this morning. So if you're micromanaging the position or looking for a day trading up, 62.65. See, that's pretty decent support. If you follow this line along as I'm going here, look at all the reactions, at least up to this point. Dance through it right here, but a lot of reactions there from above and below. And we had a divergent high here on the 60-minute chart that we're looking at recently. So you get a sell signal on an impulsive break down below 62.65. That would probably bring us to this target. Until and unless that happens, support is support. So far we hit it and we bounced today, but there's a potential trading op or maybe to add on to a swing trade. And again, sometimes everybody's saying, well, crude can't go up because of tensions in the Middle East. I have faith in the charts. Doesn't mean it's not blind faith, but it's, oh gosh, I didn't have that chart centered. There it is. So you can see everything now. But going back to the USO short trade, a trading plan is a trading plan, and unless I see compelling evidence to revise it, I'll stick with it. So this is still our stop right here. We entered right here back on April 30th and went on, hit our first target pretty quickly, and we bounced. And remember, these yellow lines are my bounce target areas. I know it's quite a few, but those are resistance levels that I think would still contain a healthy bounce, a bounce within a larger downtrend. Much above that, it's really going to increase the odds our stop will be hit. But if and when we get down to T2, I will most likely lower the stop. But as I always say, if you're trading these, and you're taking partial or full profits at any of the targets, or if you're letting it ride, let's say all the way down here to T3, it would be prudent if T2 is hit then to lower your stops, at least to break even at that point. And that's what I plan to do on the official trade. And if I don't get around to making that post, just know that's where my mindset is. I think if we hit T2 here, it would be objective to lower this stop down to 1329 or wherever your particular entry was, to at least assure a break even on the trade. All right, so let's move on. Okay, wheat has been sweet lately. We had this nice breakout here, clean downtrend line, divergences, everything I like to see. Wash, rinse, repeat stuff. This is my trading style. It's fairly simple. I mean, there's other things that do come into play. As I mentioned, wheat hit support on the long-term chart. It hit it back here, and it hit it here again. There's a very long-term trend line. I don't have it up here on my weekly or monthly chart. But, just like back then, we got a nice bounce. Now, bigger picture is, so we had, another divergent low, another rally. This is pretty significant resistance here. I have the line a little lower. I have the line at 475.77, but you can see there's two reaction highs right there that come in about where we are today. And I'm going to show you another chart in a second here. Sometimes the futures on this is investing.com. They're both you're looking at continuous futures contracts, but the prices don't always correlate with my other charting platform, Interactive Brokers. So I'll get to that one in a second. What else do I want to show you? Okay, so that's a pretty decent resistance level. There's a good shot we'll have a reaction. So you had a reaction from above there, reaction from below, reaction. Now, as I said, the commodities are kind of unique. When they run, all of a sudden, there's a lot of momentum going. They can smash right on through well-defined resistance levels like they're not even there. So I'm not I'm going to leave that active trade on, even though futures hit that level. I'm micromanage my trade. I finally, for the first time since entering, I took profits today on my wheat futures. That's what I'm trading. But the wheat ETN, it's not aligning with this perfectly. What by that I mean, you see this big drop here, and then we had these two reactions right here. We're at that same level now, right? So when I go to the wheat official trade, WEAT, and here's the problem. It's an ETN. These ETNs track by using futures, but they don't always correlate. So you can see here, this is our trade. I just showed you a minute ago that sharp drop in wheat, and then how we came up here and made two equal highs in the futures. But this ETN is lagging. It's underperformance. They have fees. They're trying to roll. They do all kinds of things. And so, again, I always say this. I'll always use ETNs or individual stocks as official trades, but I will share the charts of the futures. If you have an experience and capital to trade futures, it's the pure play. It's probably the better way to go. If you don't, and if you don't know what futures are and how to trade them, stay away, or at least read up on them. Unfortunately, I don't have the time to answer questions, with the same question 100 times over and try to explain. You can write a book on futures, so I can't explain in under 30 seconds how to trade futures and the pros and cons and pitfalls and all that, and how you have to roll your contracts before expiration and all that kind of stuff. But again, you can read up on it or just stick with the ETNs, and they do a pretty good job of tracking. Not perfect, but a pretty good job. And I just wanted to make mention there that my target was set at those reactions before and adjusted a little below, but you can see now, and it takes a while, and that's why I say I'll sometimes have to revise these targets based on how the charts are playing out. So again, you can take profits there at T2. I think the odds are decent for a reaction, and that T2 might have to be revised lower. But let me show you one other chart here that I have, and this is Interactive Brokers here, and you can see that on that one we're still a little shy. I have those two previous reactions here and that one there, about 484 on wheat futures. And so those two, so there's still a little more upside, and so therefore this is the one I'd probably put more stock into than the investing.com. So there's your breakout, there's your wedge and everything else, and I can see a little more upside before reaction here, and then hopefully we'll hit that target. If not, I may fire out an email post and maybe slightly downward revised T2 on wheat. But I still think, and I wanted to get back to this, this looks like a big basing pattern here. And so if wheat can break on out through there, whether it's today, whether it's next week, next month, I think there's a good shot that it has a nice run up here all the way up to about this level. That would be my next target, and that's also the final target on the wheat swing trade. It's set right around that level there, the T3 level. Again, as best I could correlate based on the two charts, so I might have to adjust that third target on the wheat official trade. Let me hit on Bitcoin real quick. I've had a couple requests in the trading room lately to cover those in videos. Let me just go over that real quick. So here's Bitcoin. Recently, there were a couple you can check out this post. You just, by the way, guys, I should mention this. If you're looking for something and you're in the trading room, if you're a gold member, this search function that's in the trading room, this pop-out bar on the left, enter the ticker you're looking for. For futures, I always put a /, so Bitcoin would be GXBT, and then it'll autofill, and you can see, you can scroll through here. I'm using a scroll wheel on a mouse, go back in time. There's all the things I put. These would be front page posts right here when you don't see my gravatar or avatar thing, whatever they call that here. So that's how you find what you're looking for in the trading room. And again, they're usually dated there. So I put a couple posts recently on Bitcoin. Back, this was a breakout right here. Here, I'll go to this chart right here. I posted only a few long setups this year, a few setups, period. One was here, and the other was, I can't remember, maybe a break above this level, both longs. Wish I would have tucked it away at that point. I posted right before it broke out of this wedge, and it rocked since then. Either way, this was my scenario. Most recently, I was looking to short Bitcoin. I look back at the daily charts, going back for a while, and there's quite a bit of resistance. It's had a heck of a run, and so this was my scenario here in the trading room from 4 days ago. I guess it was May 16th. Pullback right here. That was a better than a 10% drop because you had a beautiful uptrend line right there, well defined, and a beautiful gap too, big old gap. And to me, nothing is better when you see dual support levels, not one but two that come in together. So that was a scenario, bounce back, and let's take a look at the live chart, and that's exactly what happened there. So we bounce back. Now I want to add a line to this chart. So again, doing this analysis because there's been a couple requests. Right now, you can see this would be a level here. You can see the level pop up there, about 76.04. That's decent support. I'm near-term neutral. I don't have much of an opinion. If it breaks that level, we probably come into the trend line again. And if the trend line breaks, and I think it'll continue down through, probably break that recent lows. This was the support here I had at the bottom of the gap around 69.90, and I think we'll get a gap backfill. You know what I'm slightly leaning towards, and I'd like to see it, and then I might trade it. I'll show you something like this. We hold support here, we come up, we make a new high, then reverse. That would put in divergence. So you'd see here we'd have negative divergence right here on the daily chart. No, I'm sorry, this is an hourly chart, 60-minute chart, and that could set the stage for a deeper correction and a backfill, and probably be a 20-30+% drop. So there are your levels to watch, and my near-term opinion on the near-term direction isn't very strong. It's been gappy lately, so you got to be careful with it. By the way, this is Bitcoin futures, GXBT. You can trade these. It's I prefer futures. I don't, Bitcoin, I don't trust anything that's not a regulated exchange. So this is, when I trade Bitcoin, this is what I use, GXBT. Gold, I already mentioned this on the front page today. Nice, at least it's a 15-minute chart. You get 60-minute divergences. That leads to usually a longer term trade, but there's a potential, and it still needs to be confirmed, meaning we need to turn these indicators up. So a little more upside in gold. I can tell you probably if it can break above these highs right here. I put a line right there. Then it should run, I would say, at least up to this level right here. It's rough target about 1284.59. So look for a pop above today's highs. Call it 1280 if you want to be safe, and that should put a short-term trade. I'm still holding off on the official trade because I still want to see a breakdown in the dollar. The dollar has been in a consistent uptrend. This is a euro-US dollar pair, which is looking at the dollar in reverse pretty much. And so I need to see, and I think we're going to get it soon. And by the way, guys, I may add gold as an official trade before this breaks out if I get the confidence. I'm watching a lot of things, including shorter-term charts on various currencies and all that. So break out of that trend line, downtrend line, bullish falling wedge pattern, especially break over the 113-ish level, should give us a nice rally in the euro-US dollar. Means dollar down, gold up. So gold will track when you overlay it with this chart. It's positively correlated. So you want to see the euro rising against the dollar. It means the dollar falls, gold goes up. So that's what I'm looking for, and I really like it now because it's market turmoil. It meshes with my analysis that there's more downside in the broad markets, and in fact we could hit some really impulsive selling in the broad markets, and that should bring in a flight to safety bid for gold, if nothing else. In fact, I've even seen some days recently where the dollar is rising and yet gold is either holding its own or even moving up, and that shows me that is a bid to safety. Because remember, it's very simple. Gold, at least the gold you and I are trading. If you're here in the U.S., I have customers, members of the site all around the world. But if you're trading GLD, the ETF, or GC gold futures, or a lot of other contracts, there's a gold priced in U.S. dollars. So it's very simple. If the U.S. dollar drops, let's just say 10% in value, then it takes more dollars to buy a share of gold. So you hold the supply-demand constant, and a drop in the dollar is going to cause the price of gold to go up. Likewise, on a rising dollar, it takes fewer dollars to buy an ounce of gold. So that's the reason why you have this strong correlation there. And again, the other variables come into play if there's a big demand for gold, such as market turmoil and institutions and individuals flock to safety. That's going to give gold an extra bid. So all the better if you can have the currency again aligned with it. And this is my scenario for the euro-US dollar pair. That'd be a big move in the euro and the US dollar, big drop in the dollar, and a big move in gold. So I'm looking at gold, just so you know, is not just a swing trading up, but a trend or position trade. And I like it at these levels. I've been personally scaling in. I keep mentioning it, and it's a little way to have some asset allocation, particularly for longer term funds. It's more of a strategic trade right now than a tactical trade. A tactical trade will be when we get the breakout. We might have some tactical trades who can game these ups and downs. But so that's the bigger picture. And again, it's setting up really nice here for a potentially big move in gold soon, and maybe for the remainder of the year and beyond, of course, if this breaks out. All right, I think I'm going to wrap it up here. That's about all I wanted to cover. Treasuries, same old stuff. I've been talking about treasuries for a while, just a way to put some of your money. But treasuries, the risk reward is starting to diminish. I see a little more upside in TLT, about 1.5% to my targets hit. But I liked it much better back here. Again, it's just part of asset allocation mix, something a little less volatile. But we're also coming up on that previous reaction high. So really, let's just say I'm near term. Although I expect a little more upside, I just don't think the risk reward right now is as attractive to add to a position or initiate a position of TLT as it was back here on the pullback to the 122.50-ish support. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.